Good morning. I usually say happy Friday, but since there's going to be no Friday, happy Thursday. So kind of quiet here, and maybe not much is going to happen in front of the long weekend. I don't know about this holiday, but the end of the year holidays historically are positive. Maybe today will be a positive day. I'm not sure about this holiday and if that holds true, but maybe so. Um, So we know prices are correcting from that S&P 500 resistance area. And so far, not much damage done, except in the Russell. And of course, the banks got shellacked a little bit more. Nothing too terrible. Uh, Interest rates have dropped quite a bit. So theoretically, that'll help the market. But the idea that I guess it's a growing view that there will be some recession and all that, and it's going to help inflation. But look, that inflation thing's got a long way to go. So I think we have a long way of erratic markets for a while. But we're at resistance. We'll see how prices deal with it. So far, as you can see, the spiders here, they're down a little bit, but within yesterday's range. We got support a little bit further below. And I think probably they're going to hold somewhere in here today, give or take. If they pull back, we've got the 50 MA rising, the 20 MA rising, the 200 MA beginning to rise. You can see that slope. It was sloped down and flattening out and beginning to flip up. So all of these are positives, but we have to see how far prices will pull back. That's what retracements are about. Right? They're not about drawing imaginary lines, trend lines, and Fibonacci retracements and all that. Like we do, we look to the left. All right. And retracements are about looking at a move like this and saying from here to here, to some degree from here to here, taking out these pivots is positive. That's black and white. Went up to the next resistance area, stopped in the middle of it. It's beginning to pull back. And so now as we look at what moved from here to here, if it pulls all the way back down to here, that's not good. Right? It's that simple. If it's bullish, it's going to pull back somewhere in here, and buyers are going to show up and they're going to try and push it back up again, but we're still going to be within this trading range. So while short-term things look decent and they're pulling back, they're within trading ranges. And to some degree, I guess to a larger degree, if you might remember part of our conversations here, I pointed out the possibility or the thought of this maybe happening. Now, the depth of that retracement has subdued that thought a bit, but it hasn't totally eliminated it. It was still, the bottom of the trading range is here. So while any kind of pullback beyond, what we'd say would be the norm of here pulling back, say to here, what we'd expect buyers to show up. But if they continue to pull back further here, they're still just within a trading range. So just putting things in perspective here, that there's a lot of running in place. There's a lot of erratic price action. There's whippiness, and keep expectations in alignment with what is. Okay. All right. Let's do our typical. As you can see, the pullback is relatively controlled. Coming down, here's our minor support level on the futures. Pivot, it cleared it, and cleared it with authority, I would say, right? Multiple bars up, what we call a fluid move. The next bar opens in the area where the prior one closed, and then that continued. Then the momentum stalled, and now it's pulling back in a controlled manner, right, on this time frame. Over here, it's like, oh my God, right? Retracement, pivot low, pivot high. It gave it all back. That's weakness. So on the 5-minute chart, say, oh, that was weakness. That strength got eliminated. You start over again. Well, yes. Our bias here is that while there's a pivot, this is working its way down to this minor area, or in this time frame, a more major support level on the hourly time frame, somewhere in here. What could happen to change that? Well, what could happen to change that is this pivot that created support on the top of this area here. It actually holds on a pullback. You see the rejection there. And so maybe it could hold that pivot. That would be the first area we would look to if prices began to drop down right below here. I'm looking at the 15-minute chart. You can see this little support here, which, based on this depth of retracement, you would think that it won't hold, or if it bounces a little bit, and eventually comes down to where this level would be considered a more secure point for buyers to show up. Ideally, it would go all the way down there, just kind of cutting through these levels here. Why would I say that? Because the speed of a movement down there will increase the odds that buyers will be willing to step up. Right? And then we go to the smaller time frame and see, okay, how do they step up there? What does that look like? Which leads us to SPX, because if it goes down there in a faster move, the premiums will pop. And when I say faster move, we want to see that happen right early in the morning, ideally like by 10 o'clock, right? Because we know that the time decay, it's going to, those premiums are going to zero if they're out of the money today. So we want to happen relatively quickly. So looking at that, we've got our areas that we're looking at that we don't believe will be violated. And look at the average ranges. Right, so coming down to here, right, what we want, I'm looking at, the average ranges over the last several days. That's what these lines are, which is about 40 points. So ideally, we get some premium below that. And we've got the 50 MA lurking down here. So if we can get premium at 430 or below, I think that's safe for today. Well, if it can get back above a turnaround day, I don't know. TC, oh wait, no. They put premium, they put the quotes back here. Zeroed out for a while. So there's no premium up at 440, and I didn't think there was going to be, but it was zeroed out when I looked. So 4120. I think that's too close. Even with a day like this, it could be just a pop-up day. So things are getting closer as the ranges contract, when volatility is low, the juice, the premium gets closer. Whereas when things move rapidly and those premiums increase quickly, you can get further away from what's at the money. And so that makes sense down below, right? Yesterday made sense going lower. All right, everything else. Let's just take a peek at this for a moment. We talked about this at the beginning of the week, how this went up. And it's staying up there, which is, why did that happen? Well, the markets are thinking, maybe the Fed's hands are not tied. I mean, people are speculating. Maybe they are, maybe not. I'm not so sure. So there's a lot of uncertainty in the markets right now. You see the sharp drop over the last few days, but still on top of, that support level. But on a closing basis, if we look at this on a closing basis, which we peaked at yesterday, you can see it is under that level. This is the 10-year, and it's down below that. And look at these yield curves, how they're getting even more extreme and bearish. Gold continues up. It's reaching what should be its destination. It may take that out. Keep an eye on the dollar. So looking for the dollar to come down here where buyers will be. We'll see if that flips up. Gold would begin to come down at that point. Volatility index. Right? We talked about this earlier in the week, that while it's low, it could hang down here. So one of the things that you might want to do is to set an alert above this level, these daily bars. Because if this is flipping up, well, the markets are coming down. And then at that point, we'll see how far up it might get. And of course, set an alert down at the bottom here. And we'll, keep an eye which way it'll go. It could give you, without looking at it during the day, which I look at it intraday on a line chart, a 5-minute line chart, just to see which way it's going on a short-term basis. But you'll want to keep an eye on this to see it. Starts. You guys still hear me? Something, can you guys still hear me? Something just reset on my computer, and I don't know if when I was talking. Okay, cool. Yeah, I was talking about the dollar coming down here. My screens just froze for a second there, and then they came back. All right. So watch for the dollar coming down into this level. Gold will stall up there. You can see our internals here. Sentiment is still dead neutral. Surprising. And you see this is pulling back. Earlier in the week, we talked about this pulling back toward the 0 line. Hey, Mike, no, these are not new. I just don't show them that much pre-market. This is something that we review in the advisory letter each weekend. So this is, some things put together without having to flip through, saying individual charts. And so, with that said, part of the advisory letter, if you're not aware, we look at many things and, on different time frames, different sectors, lots of different ETFs, which you could look at in multiple time frames. So the letter is more than just ideas of swing trading ideas and option trading ideas. It's about, reviewing many ETFs in multiple time frames and these techno fundamentals, what's happening there. So it's very, and letter covers many, many things other than what you might think on the surface. All right. So NASDAQ, we know that is correcting a bit more. It led the way up. It tends to be, what leads tends to correct more as money begins to profit taking coming out of that. We'll see where that goes. And what we do know is happening is that it's going into consumer staples in a big way. Healthcare which was totally out of favor. Another defensive sector, which has done very well this week. Different HMOs, medical devices, drugs, and so on. So it's defensive. So that's something to consider, that what's doing well this week: utilities, consumer staples, healthcare, all defensive, and yet the markets are holding up relatively well so far. Let's see what McGraw is sharing here with me and others in the room. So maybe, I don't know if you just came in, McGraw. I was talking here. So 430. And I thought maybe if the markets dropped further, early on, 430 or below, and there's a premium up there, but 41 and a quarter, you say? I don't know. I think that's too close for me. But going from here to here, I think is unlikely. So looking at potential ranges from yesterday's close is one point of view. Then the trend is another point of view where I say I think more likely that it pulls back where buyers want to pick up again. So based on that, going up here today would really throw things off. And what do I mean by that? What I mean by that is if today turned out to be a bullish day, that would suggest to me complacency and that buyers are too enthusiastic and coming back up again without blasting through this high. That's going to be a problem. So, we'll see where today is. Gamma point of view 4120. So in English terms, McGraw, correct me if I'm wrong, you're saying from 4120, there must be relative to other strikes, that's a higher numbers of open interest at that level. Because when you say gamma, I think open interest. For those of you that aren't familiar with these terms with options, gamma means something about the speed of which prices can move. Well, right, option prices can't move at any speed unless they get beyond a certain level. And so when there's a higher open interest at a level and it moves beyond that, then there's the potential for gamma. So the way gamma is used as far as, by the definition of what gamma is and saying that's a gamma level, thinking that it's actually related to speed, I believe is not accurate, but it has the potential for speed if it's surpassed. Yes. So, McGraw sharing in here, the sum of deltas, right? More option terminology that produces brain damage. I think for me, saying deltas as far as, okay, when prices move beyond a certain level, I'm saying prices of options can increase because now dealers, market makers that are hedged have to do something. So that's why you want to know higher levels of open interest and where they're at. They can provide support, they can provide resistance, and they can provide an inflection point where things can start to move more rapidly if they move beyond that. All right, so markets are quiet here. I'm going to turn this over to Dan. We covered gold on the other section. Crude oil is jumped up there. It's stuck at resistance. Bitcoin's not doing anything. Going sideways. So it just may be a quiet day here. And we'll see how it goes. And those of you on social media there, we won't be talking. Happy holidays. All the best. Be safe. We'll talk next week.
Good morning. I predicted, this muted day here. There were some ADP numbers in the morning, but that didn't do much. Tomorrow we have employment number, but equity markets closed. So that, it could be a tad more weekend risk because you won't be able to hedge tomorrow except through the futures market. So let's see what we got here in my interest list. TAP here. Big move, bullish consolidation, red bar ignored. That's what we call a correction bar as a void. So that's on my long watch list. Let's start with a couple of these earnings stocks. Lima Whiskey gapping up. It's up a lot. I mean, look how far it is from the 200. Can you find many stocks like that these days? So just the visual aid of these three little lines will tell me a lot. you had a power move here because the 20 got extended. Now they converged, rested, and then in a longer term uptrend. Yeah, we gave squares on a short watch list. I gave it as I got tap in the other computer. I'll put it here. Yeah, square I gave as a call spread. It didn't trigger yesterday. STZ had earnings gapping up here a little bit, but doing nothing. Maybe that's why gap is going. Yeah, I mean, Greg did a video last night. We had a put spread on this on Wednesday. And because of the topping tail in the video on Wednesday night, I said, it's still fine. It's out of the money put spread and under this bar. But it's a warning sign, topping tail bar by bar. So on the rally yesterday morning, I moved the stop to break even. You can see this nice rally, and it stopped out break even. And yeah, we got two emails from people that they didn't take their stop for whatever reason, and that's why Greg did that video. But in terms of a new trade, it's a bearish gap. As a breakout failure, it has a void here. So 30-minute low. Let's look for a call spread or a short. I mean, it's ugly. RPM gap on a 79.50. That's a big gap. I'll watch it. I'd prefer it around $75. We'll come back to it. Beaky, $32. That's damaged goods. We'll come back to it. Starbucks, it's at that prior high, unless you're Thomas. I'm not sure what you're mentioning, but yeah, it's a short idea under Wednesday, because I'm not interested as a long yet. Yeah, it's just not ready for me. The last 2 days, even though we find bullish setups, I've been saying, I haven't been doing them because of the broader market. Para, it's already down 3 days at the gap fill, but look, it looks 15-minute chart in a day base. Looks like a day trade short idea. AMD, we posted as a call spread yesterday. I did it right under this little base and it didn't trigger. So now, unfortunately, I don't think we're going to get filled. Fox F got destroyed yesterday. I don't know why I'm looking at it today. AL, bottoming pattern, greater than 100%, buy setup. I'll see if it can make the turn right here. Now, SIBO, I had some type of news. I mean, this thing blasted. Kind of reminds me of McDonald's. Look at that move on McDonald's. This could be a 0 DTE call spread. If there's any juice at 285. So if someone wants to look at that for us. ABBV, gapping down, no pattern. SLP, no pattern, and light volume, light is getting whacked, 44. Now that's a big gap. Maybe it turns into a day trade. When you can see right now, pre-market, you got some bottom fishers. ALC gapping up. I was watching this on a pullback and reversal in the gap fill. Lunar, what the heck is this? This to me almost reminds me of the Reddit boy days where they had a short orchestrated a short squeeze. But it's gapping up a little bit, and we'll come back to it. Octo looked like he was on a death trend, gapping up, but I don't know. Levi earnings, that's a big ugly gap. I don't even look at the price. I look at the picture. That's a big ugly gap. This actually now would be a condor, which is selling in 15.5 put spread and a 18.5 call spread if there's any juice. Because that's going to be range bound. These AI stocks had a crazy up and down move. Look at AI. That is a crazy trading stock. Wow. Sienna, I don't know what the news is, 48.50. Right at this prior low. Let's see if buyers step up here. I'll put this in a window. Sienna. That's our other opens in the weekly options trader. Boeing, we have a call spread, it's fine. Chewy call spread is fine. Daku call spread, fine. RH call spread. Now let's move stop now. That's a nice continuation gap down here. 235.72. Let's tighten this up. Yeah, so I think it's going to be a calm day. IGV. Yeah, I'm just posting this 1 second. IGV. IGV short. It's in an uptrend. It's pulling back in an uptrend. Maybe day trade if it is gapping here to the prior low. Roku, we have a put spread that's not looking good. We got caught in that breakout failure. And then W Whiskey, we have a put spread on this little breakout, but it's far away, 31.27. So we're still fine with that. Greg's mentioning RPD. Yeah, I'm hoping goes sideways a little bit more. All right, Square alarm obviously went off. So Square and AMD are good to go if filled. We might have to adjust the premium lower. Alex, this is yours if you're here. I actually meant to post this yesterday or this morning. Another little bottoming pattern. I'll post it right now. I did post Calix. Over 28.43. You know, and this is such a mouthful, this symbol. LSXMK. Yeah, let me look at both of those. We're still in Pfizer. 20. Let's see, 18. J&J. Patrick, tell me what you're thinking. It's a climactic sell setup of the 200. I would be trailing if I were in it. It's in an uptrend on the 15. So there's no reason to short it. Then we're getting some ugly 5-minute down bars here. So no, hold off on longs. RW lower. The light, yeah, we still, this, we were wanting that, so you can't get mad. We're getting our controlled pullback. And diamond's actually holding the best.